Well, one of the top names as far as the entire investing world is concerned, we are talking about none other than Ray Dalio. And at a recent event, what he has done is that he has spoken very freely and very openly about his, latest thoughts as far as the investing environment is concerned. In fact, one of the smartest or one of the biggest takeaways from the event is that Ray Dalio has changed his stance as far as investing in Bitcoin is concerned. Now also, what he is saying is that as far as the entire investing environment is concerned, he believes that overall, worldwide, there has been an enormous amount of debt and money that has been created on the back of the easy monetary policies that a lot of the federal banks have been undertaking and undergoing. He believes that the most important thing to do is to pay attention to the value of debt and money relative to the value of assets as well as other currencies are concerned. He's also talking about the entire process as far as competitiveness of emerging economies, emerging countries. He believes that one of his fears is that countries that are working the hardest are also increasingly finding ways to work the smartest, which is hurting the competitiveness of those who are working less hours as well as less efficiently. So he believes that at one point of time, a lot of these less competitive economies could face quite a bit of disruption. The most important takeaway is his stance on Bitcoin. He believes that Bitcoin as well as other digital currencies have over the last 10 years established themselves as interesting gold-like asset alternatives with similarities and differences to gold and other limited supply mobile storeholds of wealth. So given the fact that Bitcoin at this point of time worldwide is under a certain amount of limitation, he believes that it could prove to be an alternative to investing in gold. He believes that it could be a diversifier to gold and other such storehold of wealth assets. He also believes that going forward, he will not be surprised and he finds no reason to argue that stocks cannot trade at 50 times earnings. And in fact, what he has done is that he has recommended a smart diversification among and within asset classes, currencies, as well as countries. So also what he is saying is that, his thoughts on investing, he believes it is important to diversify well in terms of currencies and countries and also as well in terms of asset classes. He believes internally this is taking place in a politically and socially threatening environment. He believes that this could affect taxes, spending, and how the world people deal with each other in terms of social as well as economic policies. Especially, he believes that externally there could be quite a bit of competition that could come about, especially from China. At this point of time, the most interesting takeaway is that he believes that there is further legroom for stocks to rally, and he believes that Bitcoin could prove to be a very useful alternate trading alternative.